Right, there we go. Okay, so good afternoon everyone. A warm welcome to you all and thanks very much for joining us on our payroll webinar today. My name's Carol Flockert and I'm a partner at Chiene Tait and I'm joined today by our payroll manager Neil Cameron.
Good afternoon.
Now some of you will know that this is the third webinar in our current series and we'd ask in our current series, is it time to give your organisation a business MOT? So far in our series we have covered cash flow management and we've also looked at the importance of business plans. Today though we're going to be looking at RTI and also pensions auto-enrolment from a payroll perspective. The next webinar in our series is going to be on forecast preparation, and just to note the date for your diary, that one's going to be on the 20th of March at 12:30. If you have missed any of our previous webinars, you can access recorded versions again through our website. Now we do have quite a lot of material to cover today, and we actually estimate that our presentation between Neil and myself will last about 40 minutes, and then we have got hopefully got a couple of minutes at the end for questions. We're not sure if we may actually have time for questions. If we don't and you've got any points that you would like us to cover, we will come back to you directly after the webinar and respond to any points that you have raised. Now, as I said, there is quite a lot of material, so we have put a pack of information on our website that you can either download now during the webinar or you can pick that up afterwards. And I think Kerry has sent you the details of how to access that. So let's have a look first of all at how you can ask a question. Some of you who've been on our webinars will know how to do this, but if you've not, you can put your questions at any time in the dialog box, and you can see a picture of the dialog box on the right hand side of the screen. We would still like you to submit your questions as you go through, and as I said, we may have time to pick up a couple at the end, and if not, we'll come back to you directly afterwards. Now, if you can't hear us clearly, you can also let us know through that dialog box, and we'll do our best to address any issues that you're having. The other way you can get in touch with us is to, if you can click on the image that with their hand up, if you click on that option, you will see you've got various things there you can signal to us. So you can see there if you've got a problem with sound or you can't hear us clearly, you can let us know in that way. If you're still having problems, please do speak to your own IT support if you're having an issue with internet connection, for example. We are recording our session today, and that again will be available for you through our website. As I said, we'll give you a pack of material after our session, and you can download that just now, and we'll also send you a copy of our slides. Turning then to Neil and myself, those of you who've listened to us before will know that I'm a partner with Chiene Tait, and I've been with the firm for 19 years. I look after the business support department, and what we do is provide an outsourced finance function to our clients, and that includes the processing of client payrolls. As well as payroll processing, we also look after management accounts for clients and advise on cash flows and business plans. With me today is Neil Cameron, and Neil is our payroll manager. He's been with the firm for 6 years, and prior to that he has a further 15 years of experience in payroll, and that comes from both bureaus such as ourselves and other in-house payrolls for business. Turning on to the subject matter for today, our title of the session was Real-Time Information Update and Pensions Auto-Enrolment Planning. So for RTI, we will briefly remind you about the links with universal credit. We'll also look at reporting requirements. We'll touch on filing dates, the penalty regime that's just been announced, and we'll cover other recent changes. With auto-enrolment, you will appreciate that this is really quite a large area. So in the time that we've got today, we will give you an overview of what's coming with auto-enrolment and when. We'll consider some compliance aspects, and we'll look at how payroll and payroll software fits into the whole process. We do run a series of webinars later in the year that will cover more about auto-enrolment in detail. Let's start then on RTI, and firstly, the links with universal credit. Because basically, we want to remind you that RTI is a support tool for the Department of Work and Pensions Universal Credit System. Universal credit in due course will replace the current benefit system. And what happens is RTI information on employees is going to go across to the DWP with up-to-date information on employment income for those claiming benefits. Now, the government had hoped that universal credit system would have been fully introduced by now, but actually what they're now doing is they're introducing a more gradual phased approach, and this has been done in a geographical basis. So this started in April last year, and it's phasing through to be completed by 2017. And what will happen is universal credit will eventually replace a number of benefits, including income support and housing benefit. Those benefits will be calculated without the need for claimants to provide information on employment or pension income. Because what's going to happen is employee information through employers in RTI will get fed across to HMRC, and that will go across to the DWP's universal credit. So that's how the system will work. And so RTI is being used to support universal credit, and it will affect many people. For this purpose, it's important that employers are getting the right information to HMRC through RTI. The information must be complete and accurate. It's also extremely important that employers meet the filing deadlines, as RTI penalties are looming. Now, Neil is going to cover in a bit more detail the RTI penalty regime. So universal credit is a very important part of RTI.
Yes, and Carol mentioned there about reporting correctly and on time, and that will be really important as universal credit is rolled out over the coming years. As Carol mentioned, the information flows from HMRC to DWP, and the universal credit for individuals is calculated on a regular basis, so it is important that employers complete RTI obligations correctly and on time, or else it will have an effect on the benefits that employees are claiming.
Great, thanks Neil. We just thought it important just to remind everybody of that point. So RTI then has been in for employers since October last year. And as you'll all know, it is integrated within the payroll process, and payroll software collects data and sends it to HMRC online. The most common type of RTI submission you will deal with is the full payment submission, or the FPS for short. The second key submission is the employer payment summary, or the EPS, and Neil is going to talk about both of these submissions. Reporting relaxation will then go on and take a poll, and then Neil's going to delve into some more detailed aspects on RTI in a bit more detail. But first of all, the relaxation.
Thanks, Carol. Yes, the first subject I would like to talk about today is the current relaxation that's in place for small businesses. Now, the initial communication that was issued by HMRC surrounding the relaxation was actually quite poor and could easily be misunderstood. Now, this arrangement only applies to small employers who pay their staff manually, for example on a weekly or fortnightly basis, but only actually process of payroll on a monthly basis. The arrangement does not apply to small employers who run their payrolls weekly or fortnightly and can report under RTI at the time of payment. These small employers will need to submit a weekly or fortnightly full payment submission on or before each payment date. And also, if you have a monthly payroll where you have 20 staff paid on the 20th of the month, you don't actually qualify under the relaxation. If a business has fewer than 50 employees, including, for example, casual season staff, harvest workers, beaters during the shooting season, for example, and you actually pay them out with your normal pay run, then you can report to HMRC with your real-time information data once a month up to the 5th of the following month. But if you do have 20 staff paid on the 20th of the month, you must report on or by the 20th of the month. Now, in January of this year, HMRC have announced an update to this relaxation. And this changes things slightly, where the relaxation only applies to micro employers, and micro employers are being classed as employers with 9 or less employees. And this new relaxation will run until April 2016. So the new relaxation, again, it only applies if you pay your staff out with your normal pay frequency and if you have 9 or less employees. Any new employers or any existing employers with 10 or more employees do not qualify for the relaxation. And as mentioned earlier, the relaxation will run until April 2016.
Okay, we'd like to run our poll today, and it sort of ties into what Neil was saying there when he was talking about communication from HMRC. So you'll see in front of you the question that we're asking today. We're asking received communication from HMRC on your RTI submissions. Now, just to clarify there, we're asking not if you've had general correspondence from HMRC, but if there's been either phone calls, queries from HMRC, or you've had any letters from them about your particular submissions. And what we'll do is we'll come back to the results of the poll just before. So if you could either answer yes, no, or perhaps you're not sure if there's been anything, if you could just take a few minutes to fill in your answers there would be very helpful, and we'll come back to that just in a few minutes' time. Neil's now going to talk about some other RTI aspects.
Okay, I thought I would spend a short time covering the Employer Payment Summary, the EPS in short. Now, the Employer Payment Summary at times plays second to the full payment submission because it's not as common to send a full employer payment summary as a full payment submission. But when the automatic penalties for late filing are introduced later this year, then it is going to be important that you file your employer payment summary when it's due. Now, the employer payment summary is used when you would like to report to HMRC that a payroll has been processed in a period, and also when you would like to recover some statutory payments, maternity pay, for example, if there's construction industry scheme deductions suffered in the month. Now, if you have no payroll processed in if you happen to have a weekly and a monthly payroll, which is processed under the same PYE reference, and you may not process the weekly payroll for a couple of weeks, as an example, over the Christmas and New Year period, then there's no at that point an EPS to HMRC. It would only be if there's a gap of more than one calendar month. If you know that there's not going to be any activity in the payroll for a period of 1 or up to 6 months, you can also EPS. So that means that you don't need to send the EPS in each calendar. In effect, you've advised HMRC up to 6 months in advance. Now, employer payment summary. HMRC had previously advised that the EPS should be sent on or after of the month, but the 19th of the month, and this was to ensure that the credit was allocated against the correct tax month. HMRC have released confirming that the actual EPS window is the 20th of the month to the 19th of the following tax month. So as an example, in the month of February, if you have an EPS to report, you have some statutory payments, you would need to send your EPS between the 20th of February and the 19th of March. The 15th of the month, you would actually need to hold off sending your EPS until you reach the 20th of the month.
Now, I appreciate Neil's given quite a bit of detail there in terms of dates. Yes, quite a lot to take in there. So this information is available from our website and also in the pack of information that we mentioned. And that applies to dates here and other dates and things that we talk about throughout the webinar. So you will get the chance to read those again later.
Okay, so the good news is that the P35 and the P14 forms are no longer required. With the introduction of real-time information, in effect, an employer is providing the information through real-time reporting to HMRC as we move through the tax year. Now, included in the full payment submission or your employer payment summary, if you have an employer payment summary to send to HMRC, will be the questions similar to the checklist and declaration that was on the previous P35. And the P11D form declaration is also included in this checklist, which is on your final FPS or EPS submission. So a point to note is that you may need to consider now, so you have the information in advance, if P11D forms are due. When an employer submits a final full payment submission in the tax year and there's no need to submit a final EPS for the year, then the submission is treated as the year-end return. If you do have an EPS to report, so you have no payments to report to HMRC in the final month of the tax year, or more likely you have statutory payments, maternity pay, again as an example, to the checklist and declaration information. This is what the checklist and declaration will look like on your final FPS or EPS, and you can see here as an example we've ticked that completed P11D and P11DB forms are due. So really you need to have this information available before your final full payment submission or employer payment summary. Now, as regards the submission deadlines, submission deadline, your final full payment or employer payments.
I should say, actually, Neil's going to why your slide in front of you has some Easter eggs. There is a point to that, and sorry to cut you off, Neil, but we will explain the egg point.
Yeah, I was keeping that a secret. People were wondering what was happening here. Yeah. The final, your final RTI submission in the year would be your final FPS or needs to be with HMRC by the 19th of April. You can't send a full payment submission or employer payment for this date. Now, the point on the Easter eggs here is for purposes, the 19th of April actually falls on a Saturday. The day before the 18th of April is actually Good Friday. So if your business is on holiday on that date, then the final submission date to actually press the button your submissions to HMRC is Thursday, the 17th of April. So remember to file your FPS before you indulge in chocolate Easter eggs. And that's where our slide comes from. If you submit your EPS and you find that there is actually something wrong with the data that's been submitted during the time, you do have a window until the 19th of May to submit this information to HMRC. And this is done by completing an earlier year up. Which is similar with the P35, P14 filing.
I think that's quite an important point, maybe just to go over it, because this is something that people will perhaps not be familiar with, because the end of year update submission is something that and could easily be overlooked.
Yes, completely. And it's something you plan, so you have the information available to send to HMRC. In effect, the final submission is your year-end.
Okay, thanks, Neil.
Okay, just to close off the RTI of the webinar, I thought I would cover a couple of additional fields that you'll be sending to HMRC in your full submission from April. There's been a change to the normal working hours that you would report for each employee. There's a section, entry B, on the slide that you will see that's been added, and that's to report the earnings hours between 16 and 29 hours. Take note, because previously entry D was classed as other, so it may be that your software needs to be manually changed to include the entry at B, and also if you need to change bands between D and E. Will be an additional field to report a reason for a late submission. This data item will be able to provide the reason why information has not been reported before an employee is paid, and the employer should provide a late PYE reporting reason for each payment separately where there is a genuine reason applicable. Now, HMRC will use this reason supplied to them to help determine whether any late filing penalties are due. So it's important that an employer selects the correct category that's applicable. One of the categories is reasonable excuse. And HMRC will monitor this to help any employers who are constantly reporting late, and whether there needs to be a further. Now, the information that's on our website and also be in the pack that we will provide after the webinar provides a link to the page on the HMRC website, and you'll be able to see there the different reasons for late submission of the forms, and also what will fall under the different reasons. For example, what actually falls under reasonable excuse, for example, or if it's a correction to earlier data. So it may be worthwhile just have a quick look at that web page, and you'll see what information will change from April. Regards penalties, really the penalties for the current tax year 2013 and 14, so that's year ending 5th of April 2014, are as they have been with the previous end of year reporting. So really everything in by the 19th of May. Everything in place by the 19th of May, no penalties to the previous P35 regime. However, from 2014, 2015, there is going to be automatic penalties introduced for the late filing. Now this will take place from October 2014. Now, HMRC had previously indicated that the penalties for late in-year if you're late with one submission in the tax year, you will not get a penalty. However, after that, there will be automatic penalties placed if you file a FPS or an EPS on time. And the slide on the screen at the moment will just let you see what the penalty will be. Potentially an employer would have 11 penalties in a tax year. So the new timetable, October 2014 is when the automatic in-year late penalties will come into play, and April 2015 the first tax year automatic penalty for a full year.
Okay, well, let's now go back and look at the results of the poll. So thanks very much for taking part in that. So have you received communication from HMRC on RTI submissions? And the results there show that 33% have said yes, you have. 61% no, and we've got one that doesn't know if there's been any communication. So quite a mixed response there, Neil, to that question.
Yes, it is, and it really goes along with what we found with our clients. We found that taken several phone calls from clients who have realised they've not sent a submission on, but they haven't received any communication from HMRC. On the other hand, employers who have submitted something late or have forgotten to submit something have not received a telephone call from HMRC. So I think that the reason that the penalties have been suspended and will start from is really the HMRC just don't have procedures in place to monitor the compliance and be able to pick exactly when an employer has not submitted on time.
Thank you. Now that's the end of our section on RTI eye for the moment, and we'd now like to move on and look at pensions auto-enrolment. Now, under this new system, every employer in the UK will be required to help more of their workers save for retirement. People are living longer, yet too many people are either not saving enough or not saving at all for retirement. The law on workplace pensions has changed those that are on lower incomes. So what I'd like to do, first of all, auto-enrolment basic before Neil covers the interaction with payroll and payroll software. So first of all, what is auto-enrolment? Well, it means that rather than having to actively choose to join a pension scheme, employees are going to be put into a scheme by their employer as a matter of course. If the employee doesn't want to be in a scheme, they must actively choose to opt out of it. And again, the theory with this is to encourage people to stay in pension saving. Auto-enrolment creates a situation where all workers, whether they're full-time, part-time or casual, from the age of 22 will automatically be enrolled into their qualifying scheme, unless they make that decision to opt out. Secondly then, who are the changes going to affect? It is going to affect all UK no matter what size. So it's all UK employers who have eligible employees in their workforce will have to comply with this legislation. Employees can make the decision, but they must be re-enrolled into the scheme every 3 years when they join a new employer. When is this all going to happen then? Well, basically,
able to ensure that all these obligations will be met in each pay period. So this is really something that you should be start to think about now. Plan your staging date. Closes off the auto enrolment section. A couple of other areas just to speak about briefly. From April 2014, the employment allowance is being introduced by HMRC, and this may help some of the involved with providing a pension auto enrolment scheme to your employees. From April 14, eligible employers can reduce their employer national insurance contributions by up to £2,000 in each tax year. And what you do is you use your payroll software to actually claim the employment allowance. And when you make your claim, you can reduce the NIC employer NIC payment by an amount of the employer allowance equal to your employer's NIC, but not more than £2,000. It's recently been announced that employer national insurance contributions for employees aged under 21 years will be abolished. So any employees that you have on your payroll at the moment, and any that you're looking to employ aged 21, you will not have an employer national insurance contribution, and that's on the earnings up to the upper earnings limit for national insurance purposes. So that's good news for employers that you have from April 2014. You have £2,000 that you can actually reduce your NI, and then at the start of the following tax year, April 2015, national insurance for under 21-year-olds are being abolished.
Okay, well, thank you very much, Neil. Just now like to move on to questions. We've got a few questions that have come through. Thank you very much for those. Maybe only got time for one or two, but let's see how we get on. The first question we've got is in respect of RTI, Neil. And the question is, if there is an RTI employer, registered employer, so somebody's registered, they are an employer, but there's been no employees in a particular tax year, there's been no IPS submissions made, so any end of year submissions that are required to HMRC, or need to contact HMRC by phone or?
Yes, we have an active PYE reference number, but there's not any payments to employees or directors being made through the payroll. You should actually submit an EPS to HMRC to advise them that there's an active PYE reference, but there is not any payroll being processed. Your final EPS submission in the tax year will be treated as your end of year return. So you really need to close your payroll for the tax year by submitting an
suggesting another question that's come through here, also of RTI, and it's somebody that's saying they have two directors, they receive a bonus in month 3, which results in a pay-as-you-earn liability. They've not received any salary since then, and the person who's given the question said they've filed an EPS until now. Should they process the directors as a nil salary in order to receive the tax deducted at month 3?
Yeah, we just need some more information on this just to make sure we understand correctly. But is it that in order to actually arrange the tax refund for the employees. So is it you're actually looking to process, although they were paid in tax month 3 in June, are you actually looking to process them again in order to claim back some of that tax that was calculated in month 3? If that is the case, then you would need to submit a full payment submission, because in effect you are making a payment to the directors, which is their tax refund, which is due in the tax year.
Okay, thanks. With that question in particular, it was quite specific, so Neil will be in touch afterwards just to clarify the details there. Unfortunately, I think that's all the time that we've got now. There are a couple of questions that we've not managed to answer today, but what we'll do is we'll come back in touch with you directly to give you answers to your points, if that's okay. I would just like to close then for now to say thank you very much for joining us today, for participating in our poll, and for the questions that you've asked. You'll see there on screen our web address if you want to have a look at the information we've got on there. If you do think of any further questions, please either give us a call or drop us an email, and you can see our email addresses there. As areas covered today. So we've got information in there on the EPS filing dates, we've got information on submission deadlines, late reporting reasons, penalties. There's bits and pieces on auto-enrolment, so please do have a look at that when it comes through. As always, we will also send you a short feedback form asking for feedback on our webinar today, and it really would be tremendous if you could take a few minutes of your time to complete that. And it's always good to get your views, anything you want us to change, we could do differently. So it'd be great to hear from you there as well. You'll also shortly receive details of our March webinar, and again that's the 20th of March on forecast preparation, and we do hope you'll be able to join us for that. That's all for now. Thanks very much again everyone, and I hope you all enjoy the rest of your day.
Thank you.